Check, 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 check. Mic check. Can you see my screen okay? And can you hear me okay? I will say my voice is feeling a little better. It's not quite as hoarse as it was yesterday. So that's a good thing. Good morning, good morning, good morning. We are looking at a gap down on SPY. This is the 5-minute time frame. Yeah, so gap down yesterday, that rallied up. I think we talked about it, right? Where we said we couldn't be surprised to see these worries or these fears not follow through and instead get bought. We've seen that many times during the course of this current administration, where these tariffs get threatened and the stock market reacts and we see a sell-off, and then the tariffs get redacted or not imposed and the stock market recovers fully and beyond. And so, I think we kind of saw that yesterday where you had an initial fear of uncertainty. Are we going to war? Is World War III going to happen? What is going to come of this U.S.-Iran ordeal? And it was announced that there would be, no long-term war established, but the U.S. would do what it needed to do to protect United States interest. And stock market rallied because of that. Well, now we're seeing another sell-off, likely due to further action or further progression of this geopolitical tension that is going on. So, yesterday we talked a lot about position sizing, and everybody was so concerned about my position sizing when you need to really be concerned about your position sizing. I actually made a podcast episode and that said, stop thinking that you should be up more. And I talk about how much you're up versus how much you're down, or how much you make versus how much you lose is exactly how much you were supposed to make or how much you were supposed to lose, because you made the decision to be okay with that when you took the trade. And we can apply that to me, because you should stop worrying about how much I should be up. Or if you shouldn't worry about how much you should be up or down, then you shouldn't be worrying about how much someone else should be up or down. So position sizing, right? We talked about position sizing. I talked about how initially, it started the challenge. My position sizing would likely be somewhere around $2,000 per trade. But just because I can take $2,000, $3,000, $4,000, $5,000 per trade doesn't mean that I have to. Yesterday, with it being first day of the account challenge, yesterday with it being Monday after all of these geopolitical tensions, yesterday after it being the first day back from the weekend when all of this stuff over the weekend kicked off, it's not a risk-on environment for me. And so I sized appropriately. And I think some people were pretty upset about that. And I'm not sure why. If I did what I was supposed to do to protect myself and my account, I don't get why people are upset by that. I guess because somebody lost more money than me. I know I took losing trades. I know the trades that I took didn't work. I know that I probably could have cut the trades a little faster, and maybe I didn't even have to take a second trade yesterday. But I don't understand why people were upset about that. When I post my loss and maybe is it not, did you think am I supposed to be down thousands? Is that what you were hoping for? So just, I don't think that this is the vast majority of you that this is an issue with, but it is an issue with a few of you. So to the few that this statement is resonating with, I advise you to stay in your own lane. Stay in your lane and do what's right for your account. This is not me coming at you. I'm trying to help you. Do what you're supposed to do to protect yourself. I don't know your situation. I don't know if you've got hundreds of thousands of dollars in the bank account and you're a trust fund baby and you've just got money coming out the wahoo for no reason. And I also don't know if you're a broke college kid struggling to make ends meet and all you have is $1,000 to your name. I don't know your situation, but I can almost guarantee that we've got people here on both ends of that spectrum. So there's not one thing that I could say that is going to be applicable across the board for every single individual here. Therefore, when it comes to trading and position sizing and your risk assumed, you need to be doing what is right for your account. Please, 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 please. In my opinion, with everything that's going on, this is not a risk-on environment. This is why I wanted to go live as early as we are this morning, because now we're going to have to, I haven't even looked at anything else. And we're going to have to fully edit this watch list. And who knows, maybe nothing is going to be in play. I doubt it. But this focus list that I put out yesterday, we're going to have to edit this entire thing because of this gap down. And when you have to do that, when you have to make such big, vast changes because there's so much going on in the market, that right there is your first sign that tells you, slow your roll, dial it back. Trading is not about how much money can you make, how fast can you make the most amount of money that you possibly can. With that mentality, you will lose. And you will probably lose everything. And you'll probably blow up. And you'll probably quit. The money will come. But you need to stay sized properly to get to a point where you reach consistency and get to a market cycle that favors our strategy before that money starts to print for you. Okay? So please don't take this personal. I feel a need to tell you this stuff because nobody else is going to tell you this stuff. Nobody else is there for you to say, hey, you shouldn't be doing this or you shouldn't be doing that, or hey, congrats on this or congrats on that. So I take it upon myself to be that figure for you. I'm not trying to be anybody's dad, but you know, when you start getting upset about my losses, or maybe even your losses, and you come at me for that, you know, there's got to be some statements made. So please, you know, we just do better. Let's just do better. And I need to do better too. I'm not saying that I'm perfect. I made a mistake. I made mistakes yesterday too, but you got to size properly to be able to handle those mistakes. And I think that I was, and I think that some of you were not. And that is probably where there was a disconnect yesterday. So just do right by yourself, and you know, you can't be upset about anything as long as you do that. All right. SPY, first one on the list. Now listen, we talked about 675 yesterday, right? Remember that. We talked about 675 yesterday. If you don't remember, look at the daily. Look at all this support, 675, correct? We have not moved that line since we placed it yesterday. This is a wider range on the daily. This is a 2-month long, 2.5 months here of consolidation on SPY. What do we think's happening right now? Well, we see a big ass sell-off, don't we? So with this trading now right at, look at this, 675. I can't make this up. With this trading right at 675, what do you think we look for today? Lower lows. I think that's the only thing that makes sense to me, is to look for lower lows. So we can't go short at 675, obviously, because SPY is trading at 675. 674 doesn't make sense to go short at because you got pre-market low at 673. So we go short at $673 today. Short at 673 for SPY. Let me pull up the watch list. And this is how you know that we're building this out together, because I have not even removed the list from yesterday. So we short at 675. Look, we don't have to change that line. We just leave it there. So the trading plan is exactly the same on SPY. from what we were analyzing for yesterday. The only thing is we just move that. Well, we do have to move the line. Sorry, we move it down, but the trade idea is exactly the same. We're just looking for the lower lows. So short below 673. I don't feel comfortable going long on this. I know that yesterday it worked. Probably, if I had placed the long level earlier at 681, it really would have worked. But I don't feel like I should place a long at 678 and be aggressive on this. I just don't. I think that if we miss an opportunity where this corrects and runs topside, then so be it. But this is there's nothing here that looks bullish to me to put this on the list as a long idea. Yesterday I placed the long at 686 and I was even hesitant about doing that, but it was the right level to place because look, you've got a rejection at the PDC, and then you got another rejection at the PDC at 686, and then when it did claim 686, it holds and bounces and goes, right? So some money could have been made here and here. Granted, that's the midday session, and I wasn't here for that, but it was a nice level to place. That being said, if we zoom out, if I were to operate the same way and place that line, at the previous day's closing price, which is roughly 686, this just feels so out of play. Look, SPY made that move yesterday, but really kind of by the time it got there, buyers were exhausted, right? Pretty burnt out here. So I don't think that a long level at 686 is in play. Therefore, the only other way to approach this would be to place a long level closer to this peak around 678, which I do see some reaction around that level. You got a pre-market resistance there, and then we pull it back. That was basically your opening price from yesterday. So you could be aggressive with this, but I'm already being aggressive with the short level. So I would want to kind of be more conservative with the long. So maybe long at like 680, for example, that being the bottom side of this smaller range here on the daily. But if we go long at 680, look at what we're trading into. If we go long at 680, we are trading into this chop zone. So I think that we totally omit the long level altogether, and we just focus SPY down. That's it. I think that's it. It's messy topside, right? And so we just want to avoid that altogether. And like I said, if this recovers and runs, I don't think that we can be surprised because that's the type of moves that we've seen in this market when we get crazy gap downs. But at the same time, there's really not an opportunity presented to us topside. So I think that I think that we leave it. I think that we leave it alone. We only look for SPY short today. If we get it, we get it. If not, then no trade here. All right, let's see who's in here. Good morning to everybody. Farzan, welcome in. Brandon, hello. Austin Sharp, good morning. Ricardo, Roy, Orpheus, hello, hello. Ming, welcome in. Abiola, Ocean Alexander, Simon Vez, good morning. Young Ace, Olivier, good morning, good morning, good morning. All right, UNH. UNH, next one on the list. So this looked good, right? With the resistance, we know resistance is up here around 294. At this time, I would say resistance is closer to 295. We placed the line at 294. Yes, I would say resistance is closer to 295. But this is your zone of resistance, resistance, resistance. Therefore, UNH should be a long idea at 295. Is this in play today? Not really, right? The problem here is, well, if we get a run to 295, that's already a 2% move to a known area of resistance. And what's likely to happen if we do get this move, what's likely to happen is buyers are probably going to be exhausted by the time we get a run up there. So I'm going to take UNH off the list. We will set an alert at 295 to remind us, just in case, maybe it gets there. I don't know. But it's not in play right now. I would have loved to see a flat open because this would have been a really nice potential break of the resistance and run to 300. That would have been an easy move for us to capitalize on here. But, the gap down pulls this out of play. So we take UNH off of the watch list, unfortunately. PLTR, Next one on the list. This one did go yesterday. I know some of you, some of you probably quit trading for the day after I took this loss, and this was one of the mistakes that I made here. This was a mistake where I was looking at this as at the time. This is what I saw. I'll be honest with you. At the time, this is what I saw. So forget about this trend line. This bull pennant is what I saw, and then this at one point was a full-bodied green candle, and I didn't even really glance at the volume, which is a mistake too, but I thought this was a breakout move, and I tried to jump the gun and be slick and take the entry here and catch the breakout move topside. I thought that that's the move we were going to get. And it just was bad timing. It didn't work, right? This was a fake out. I gave too much focus to the 1 minute time frame. 5 minute time frame candle at this time didn't even close over the trigger level. So I broke the rules by taking an entry as early as I did, and I paid for it. I take a loss here. And some of you quit after this. You gave up on the day. Maybe, which is rightfully so. Like I said, you got to do what's right for you and your account. And at that time, if that was too much of a loss, or you were hitting your max loss for the day, maybe it was the right choice to quit. But we did go back in on this. Once we got this ascending triangle breakout, and this trade did work. I wish actually that I had took this trade, right, which this trade was 20%. That loss there was about 20%, and I used about the same size on both. So these two basically wash each other out. But I do wish that I had taken this trade into the profits and then stayed, because I likely would have taken this break here, or possibly this dip here for this run there, right? And then I would have been, that right there might have put me green on the day had I taken this trade or this leg of the trade. So PLTR does work for us yesterday, but it does not sustain the move going into today. So let me clean this chart up some, and I'll show you what I'm talking about. Because PLTR did work yesterday, when I was looking at this yesterday, and then going into today, all I wanted to see was a continuation. And for me, a continuation would need to be a break of 147. So unfortunately, the pullback this morning, we're going to see this theme a lot. Unfortunately, the pullback this morning, for PLTR to even get to the PDC, it's almost a 3% move. For it to get to yesterday's high of day, that's a 4% move. And then if we took the trade after a 4% move, we would need it to run even further for us to profit. Could it happen? Yeah. Is it likely to happen? Probably not. Probably not. So the only way that I see us taking this is long at 145. The problem with that is if you go long at 145, look at all of this resistance you're trading into. You definitely have resistance at 146. You definitely have resistance at 147. And like I said, you're taking the trade after the stock is already up 2.5%. So 2.5% into resistance, after a 2.5% move into resistance, if you take the trade there, you're limiting yourself on profit margin. What point does this hit and reject? So I don't like this because there's not wide open room anymore for this to run. It's not as simple as, hey, let's just take this for the break of this peak resistance up here and run it, right? There's levels to this that this needs to recover and recoup. And on top of that, that's not the only resistance it needs to break. It's got all of these other points of resistance on the way down that PLTR needs to overcome and reclaim. So I don't like this for a trade today, for a continuation. So I'll set an alert at 147, much like how we did with UNH, but we take this off the watch list. And this is going to be the theme today. It is because of the gap down. That is why we are live this morning. We have to, I'm adjusting this level these levels in real time and showing you the reality of, hey, you can have a picture perfect plan on paper, and then you wake up the next morning and that plan totally changes and you have to adjust. So here is us adjusting in real time. Up next is Netflix. Now this one's not so bad. This one is not so bad. Yesterday I did get I don't want to say faked out, but yeah, this trade didn't work, right? Netflix did. It did work over here. It did not work on the first break. It did work on the second break. The gap down this morning does kind of pull this out of play. A proper continuation for us would be a break of 98. The gap down percentage-wise is, it's 2.5% away from the PDC, and unfortunately 3.5% away from the previous high of day. So it's not. It didn't look bad at first, but yeah, percentage-wise, it is pretty bad. It's just too far away from the continuation price points. So I'm going to set two alerts. I'm going to set one at 97, and I'm going to set one at 98, and I think we probably take this off the list too. I don't think that we trade this today. And this is just the harsh reality. I mean, it's not really in play for a long idea continuation because of the pullback this morning. So, we just move on. Set levels and set alerts and move on. Amazon. All right, Amazon on the daily. Now this one, because of where it closed at, it put our original trade idea back in play, which was that long idea. I think we said long at 211 is what we were looking for, maybe long at 212 for the run to 213 plus into the gap, right? This is not a bad recovery move yesterday to put us really close to that resistance. But when we go back to the 5-minute time frame, look at what we got. It's just another sell-off. So for this as a long idea is out of play, but we can now flip the script here, because what we know to be true about all of this is that it is consolidation and it is a range. Therefore, we can trade this to either side. A break of 202 would be a break of the support of the range, which likely sends us to 200, and below 200, we start to look for this low down here, which is 196. So can we take a trade on Netflix today? Yes, Amazon. Could we take a trade on Amazon today? Yes, but not in the way that we thought we would. So it's no longer a long idea today. We are going to omit the long idea. We are going to look to take it short. And there's two ways we can run this. First way is going to be short at 202, which happens to be your pre-market low. I don't mind that idea because it would be a proper break of the range on the daily time frame anyways. The other thing you can do is say, well, Gates, I need to be a little more conservative and I want to just take it short at 200, which is the whole number, which is going to be a natural point of support. So either way, however you want to run this is up to you. I don't mind being a little aggressive on this because the sell-off on SPY is a little aggressive. I'm going to put this on the side chart, so Amazon below 202. I'm just going to put it as a side chart item for right now, and we'll come back to it later and maybe move it around and shift it around if we have to. If we are going short at 202, though, you do need to understand that there's going to be potential support at 200. Okay, so profit margin-wise, we might be limited on, that's 1% profit margin. So we might be limited on profit margin here. Why am I telling you this? Why is this important? Well, if we go short, hear me out. If we go short at 202, and you know that our profit-taking strategy is we look for 20%, right? We talked about that yesterday too. If we go short at 202 and we are looking for 20%, and we are in this trade at 202 and it drops to 200, and we are only up, let's say 13%, we're not hitting 20% just yet. We're up 13% when it hits, and then it starts to consolidate or it starts to look like it's reversing back up. This would be a scenario where you originally look for 20%. If you're not offered 20% by the time that this hits the support, you need to consider taking your profits at whatever you're up. So if that's 10% or 15% or 17% or 13%, anything sub 20%, you need to start considering taking that if this hits that support and does indeed look like it's going to hold. You understand? So I'm going to leave this on the watch list as a short idea under 202 with the understanding that under 202 we've got potential support at 200. Up next on the watch list is Meta. Yeah, so I liked Meta as a long idea continuation. That's why I put this on the watch list. If you look at this on the daily, You got a break of the downtrend trend line. You've got multiple rallies up on Meta to test the 50 EMA and the 200 EMA from the bottom side, as well as the $650 whole number is right here. You're not getting a lot of reaction around 650, but it is there. And on top of that, this is a range, a proper range. So my thinking was, well, shoot, if Meta had a strong day yesterday, this is a bullish engulfing candlestick. If this had a strong day yesterday and we get a continuation up, that's a break of this downtrend trend line. That's a break of this range. That's the reclaim of the 650 whole number. That's a reclaim of the 50 EMA and the 200 EMA. And this is a potential breakout move. That's what it looked like. And then we go into this morning, womp, womp, womp. It's a sell-off, right? You get the gap down. So the gap down, yet again, it just pulls this out of play. It pulls it out of play. So I don't like Meta for a trade idea today. The only way that I would even try to trade this today would be to go short for the remainder of this gap below here to be filled. But that starts at 626. So we move to the 5-minute time frame. Yeah, this is far off from 626. This is far off from 660, which is your high up here. So there's no trade. There's no trade on this. So we omit that. We take that off of the watch list. Yeah, pretty crazy, isn't it? How about Microsoft? So we move to Microsoft, MSFT. Why would I put this on the watch list? Well, we got the consolidation here around the $400 whole number. Yesterday retested 400, couldn't quite close above it, but closed really close to it. My thinking was above 400 we could be bullish, below 400 we could be bearish, but I was mainly looking for the long idea because we had a stronger market yesterday. And yet again, well, you got a sell-off here. So to go long at 400, it does make sense. I love the long idea at 400. The problem with that is the move that this needs to make to get there, which is 2.3% away, which means that this is not in play. This is not in play. So we are going to remove Microsoft from the focus list today. All right, next is NVIDIA. Up next is NVIDIA on the watch list. So there's a little gap above. Let's go to the daily so you can see that. There is a little gap above that started to get filled yesterday, which actually looks more like that. It's a very tiny gap. We know NVIDIA has been selling off. The stock has been weak. Yesterday gave you a bullish engulfing reversal off of the 200 EMA. You would think we're going to go long top side. That's what I thought. And then 5-minute time frame, again, womp, womp, womp. You get the gap down. So the gap down pulls this out of play, but we know that this has been selling, so we can look for a continuation move down from the original trend, which was down. So we can consider this just a relief rally. This is a big ass relief rally, but we could consider this a relief rally that just kind of stutters the original trend before continuing down in the original direction. So I do like this as a short below 174. Percentage-wise, it is about 1.7, 1.8% away from 174, but NVIDIA is known to make big moves, and it has been making big moves the past 1, 2, 3 trading days. Therefore, I think that we could still see increased volatility out of this. So I like this as a continuation short. You could go short at 176 if you wanted to be a little more aggressive on this. Just know that if you do that, there's potential support at 174. I want to be more conservative. I want to see a true lower low. So I'm going to set my level at 174 and not at 176. All right, so that's our full watch list, which is you got nothing. We got nothing here. So what do we got to do? Well, we've got to go through now our major list here and see what else is in play. Because surely the names that I analyzed yesterday that were not in play for short setups are probably now in play for short setups. So now we roll through our master list here and see, is there anything that we missed that might be in play to the short side, which we're not going to see that on the daily time frame, but we will see it on the 5-minute time frame. This is why it's so important to conduct what is known as cross time frame analysis. So let's start with that. When I'm going through this list, by the way, what I'm looking at is the pre-market price action. So we can go through this list pretty quickly. I am looking at the pre-market price action here, and I'm looking for anything that looks, out of the ordinary, or anything that might be close to a support point, or anything that might look like it's range trading. So something like this would look pretty good, right? Alibaba, though Alibaba is it's traded on different exchanges. It's a China name, so we're probably going to leave Baba alone. But that would be something that we're looking at or looking for. So let's keep rolling through and see if we can find anything that looks halfway decent. So MU, we know MU has been extended up here. I like this potentially under 370. Is it near 370? Not quite. Okay, so eventually I think MU becomes a sell-off trade idea if we see this market continue to stay weak, but maybe needs another day. So Target is up after earnings. Target is this is not typically one that's day traded. This is a sign for you. If you don't know this, anytime you're on the 5-minute time frame and you see doji candles like this, on a 5-minute time frame, that means there's super low volume, and this is mostly algorithmic trading. This is something that you typically want to stay away from as a day trader. Look, you see these little hash marks everywhere. You see doji candle 5-minute time frame, doji candle 5-minute time frame, doji candle 5-minute time frame. You see multiple of those. You want to stay away from that for options day trading. Now for common shares, it's a different story, but for options, that's no good. Now I know this is post earnings, so possibly we could see some increased volatility. Maybe we do add this to the list above 119. Walmart has been a name that's been absolutely running, been a monster. Above 119 for Target does put this above this resistance. So potentially over 119 could be a trade idea for us. But maybe there's something else that looks better. So let's skip this one for now. I'll tell you what, I'll put it right here and I'll put some question marks beside it, because if we don't find anything else, this is not a bad placeholder for us. But this is something if it wasn't earnings, I would stay far away from it. The only reason I'm considering it is because with earnings, typically you do have increased volatility, you do have increased volume, and in a market that is selling off right now, Target is showing relative strength. Perhaps it could be where traders reposition to or cycle over to. So we're considering it, but it's a very soft consideration. So let's keep rolling through and see if we see anything. So there's Amazon. All right, so BBY, so Best Buy. Best Buy's up, but I'm going to put this in the same category as Target, right? It's just not one that's typically day traded. It's probably one we want to stay mostly away from. So let's just keep rolling, see if we find anything better. Okay, so this is a good example. AMD, this has been selling, right? The name has been weak. What I see, though, this is why I like to highlight on the daily time frame. I like to highlight my gaps with this big gray box, so it's really easy for me to identify. We've got a few things going on here, a lot of things actually. Number one, AMD is trading within a range. All right, so we can say that's your first hashtag there, or not no, your first check, your first confirmation. First, it's in a range. Second, AMD is trading under the $200 whole number. Okay, that's your second confirmation. Third, AMD would be trading inside of this gap on a lower low, so that's number 3. And 4, AMD would be breaking the 200 EMA, which is a dynamic line of support on the daily chart time frame. So that's 4 reasons, maybe even 5. You could say that this sold off. This has been selling off and been rejecting the 50 EMA. So that's about 5 confirmations there for us to take this trade. I don't know why this is saying earnings conference call today when earnings just passed. I don't know what this is about. Maybe they pushed it. I don't know. But it's after hours, correct? I think so. So it shouldn't be a problem for us as long as that's after hours and not during market hours. Yeah, it's after hours. So we add AMD. This is probably our best setup of the day. We add AMD to the watch list for a short idea. Now, it's got to be a short below the pre-market low, but a short idea into this gap area. And we can go aggressive on this because of the gap area at 190. Now, if you need any more confirmation on this, the only thing I would do is say short at 189.5. That's it. One of those two lines should work for us today. So AMD short below 190. I'm going to be aggressive on this because of those 5 confirmations. Short at 190, and this is likely going to be our top stock pick of the day. So we're gonna write those confirmations now in the comments. So we're going to say rejection of the 50 EMA on the daily and gap down this morning, close to the gap on the daily time frame, nearing a break of the range. And we will leave that there as it is. So AMD short below 190, probably going to be our top stock pick this morning. Google, next one on the list. All right, so 300. Go back to the daily. Remind yourself of the setup. Google has been fighting to hold. We've analyzed this previously. It's been fighting to hold 300 as a point of support. Selling off. We had 3 days of consolidation, then a rebound move. We traded it long that day, and then we were looking for a follow through topside. Didn't get it. Rejection of the 50 EMA back down to the $300 hold number, and then now this morning you've got a gap down, much like everything else, underneath 300. Therefore, Google should stay below 300. In the bearish scenario. I'm not looking to take this long. It is only going to be a short idea under the pre-market low, which is 296, which, by the way, if we go back to the daily and we pull that line at 296 to the left, check this out. 296 bounce here, 296 bounce there. So if you want to get real specific with it, under 296, your next support point is probably going to be 280. Maybe 290, then down to 280, and then you start to look to 270. So I think there's a lot of potential profit margin offered here. My only concern is the amount that this is down already. It's down 3.15%. So it may feel extended down. But we're going to rock with it anyways because we don't have much else out there. So Google short below 296. We're going to say on watch for lower lows, given the gap down this morning and the failure to hold the 300 whole number as a point of support. All right, and then we keep rocking. We only got a few more. I know we're getting short on time here, but we only got a few more, so let's keep rolling through. Okay, back to Tesla. So Tesla now, originally, right, we were looking for the break under 400, but on the daily, your true support on Tesla from yesterday's low and this low here is around 388. So we fast forward, right? The break of 400 is here. The break of the 200 EMA is here at 395. Now we fast forward to this morning, and this is not far off from a continuation move down. So I do like Tesla under, I think, probably 388. I think we probably just trade it, be safe with this. So let's go Tesla short below 388. I'm going to say, given the gap down this morning, we are watching for lower lows under the 200 EMA on the daily. All right, just a few more. Hang in there. We can roll through these pretty quickly. Again, all I'm looking at is the pre-market price action in comparison to all of the other price action recently. Plug is actually up, though this is a penny stock, so we're going to skip that. Now, keep in mind, okay, with the gap down this morning and everything kind of, it's an extended gap down. With the gap down this morning, this is Apple. The ideal scenario on a gap down day is an opening rally that gets sold. Apple actually looks like it could break this uptrend and give us a bigger move down. So it'd be a short under 260. I don't mind this trade idea either. You see that on the daily, right? We could argue that this uptrend here, when it's making these higher lows, we could argue that if this uptrend breaks, we see a move down, a shuffle move down. So I like this as a short below 260 today. This is probably going to be a side chart for us. And I think we have enough now. We could probably get rid of this target. I don't think we would trade that anyways. So let's go Apple below 260. Oh, the watch list is short heavy. We don't have very many. We don't have any long setups out there, but we're not given any. Pinterest is up. Why is this up? Pinterest shares are trading higher after the company announced a new $3.5 billion share repurchase. So it's a buyback, a share repurchase program. Activist Elliott invests $1 billion in Pinterest. Okay. Would we trade Pinterest? Probably. And this isn't bad price action yesterday. It doesn't have horrible. Yeah. I don't know. I think that we maybe just skip it. Hood is down, so off that gap. Hood's down off that gap area again. Yeah, so here's the deal. Look, we are only subject to what we're given, right? Normally, I like to include variation on the watch list, but if you're not given variation, don't force it. So I'm not going to force anything. I might add Pinterest. I would trade Pinterest over something like Target. I might add Pinterest over 20, but beyond that, what was that? GM? Hold on. Oh, it was SPY. No, it was SPY. Okay. Yeah, beyond that, look, if we're looking for the continuation move down today, if we don't get it based off of our watch list, we probably won't take a trade. So just keep that in your mind too. With trading, it's not all about how fast can you make the most amount of money. Sometimes there will be times like this where you got to throttle back if you're not given the move that you're looking for. So do we add pins here above? Pins above 19.5 actually could work. I said 20 at first, but I like it above 19.5 instead. So that'll be our one hedge. Sure, why not? Pins over 19.5. So it's a positive reaction to a news catalyst, and that's going to be your full watch list. So let's make sure that our levels here are good before we post this. SPY, AMD under 190. Google under 296, Tesla under 388, Amazon below 202, Nvidia under 174, and then we got Apple under 260, and we've got Pinterest over 19.5. Yeah, everything here is good. Yeah, so look, if we don't get a continuation sell off today, we probably won't have any trades. And we just need to be mentally prepared for that, and we need to be mentally okay with that. If we're not given the opportunity, we don't take any trades, and that is something that we just got to be okay with. And we don't want to force anything. That's the biggest thing. If we're not given the opportunity, we don't want to force anything. So the watch list is posted in the Discord server, and we are trading live today. In case you don't know how to navigate there, let me show you. This is how you're going to get there. So we're not going to try it trade live on YouTube. It's going to be held in Discord. Discord server, scroll all the way down, left-hand side of the server. You're going to see a channel called The Arena under Voice Channels. Meet me over in the Arena. I'm going to end this stream here. Meet me in the Arena. I'll be there in about 10 minutes or so. All right? Thank you for your time. We are going short today, most likely. So we are looking for a breakdown further. All right. Good luck. Hopefully we get some clean price action. We're going to navigate this market carefully, do right by yourself, when it comes to risk management, do what is right for you and your account, please. Please, please, please. Everybody's going to be in a different situation. So, whatever that looks like, whatever your risk management looks like for you is what you need to be doing. All right. We'll see you over in the Discord server. Take care.